All right, the time is 10:30. Good morning, one and all, and welcome into this TRS Member Services Overview for HR professionals. We welcome you all in to learn just a little bit about the TRS benefit structure, enough to be able to guide your district employees or your TRS members toward the benefits that we offer when necessary. My name is Nick Stabler. I'll be serving as host for the hour. Joining me on the panel are Sandy Benhart, who will be our main presenter today. Carly Leffel is joining as as Q&A help, and then Terry Bailey will be part of the presentation, primarily for the TRS Supplemental Savings Plan. She'll be available during Q&A as well to answer questions about the SSP. Just a couple of quick housekeeping items before we let Sandy take over. One is that all of your microphones have been muted for this presentation. That is to keep background noise to zero so that we can all give our attention to Sandy while she presents. You will have the opportunity, though, to interact with us during those Q&A sessions. During that session, some questions we will relay to Sandy for an answer for the group. Others we will answer kind of in the background. Myself and Carly will continue to answer some of those individual questions in the background as well. So even if your question does not get a verbal response, just make sure that you are watching that answered questions box for an answer to your individual question. That is my list of housekeeping items. So without any further ramble from me, I'm going to go ahead and hand your attention over to Sandy Benhart.
All right. Thank you, Nick, and good morning, everyone. Terry will bring her back on in a little bit. One thing I also will add is that when we close out, there is going to be a survey, and we would really, really welcome your feedback. We do make changes to what we present to better help you going forward. So if there are things that we don't cover or things that were particularly helpful that you would like to have included in a future presentation, your feedback in that survey is very, very helpful to give us direction down the road. So let's talk about what we're going to talk about. We will lay some basics on as to what the role of TRS is. Sometimes there's misunderstanding on that. And then what the basics are of the TRS program. And then we have a few other pieces to our program that we want to be sure you're aware of. One being the TRS Supplemental Savings Plan. And we have our expert on that will give you an overview of that. That'll be Terry. And then disability and death benefits, health insurance, how people get ready for retirement and how you would direct them in that. And then post-retirement, both the increase in the work limits. Those are really important topics for you to be aware of. So let's start with this. What do we do for our members? Well, we run benefit estimates. So the TRS pension, we refer to it as a benefit, a pension, an annuity. Anything along that line is what we refer to the pension. So when we run an estimate, we are using the best information we have at the time that we run it to tell someone what they might expect for their pension down the road. In order to do that, we need to know what they're currently making. You do report coming up quickly. You will have the due date for the 24-25 year. We'll be looking for earnings reported on the annual report. And that will sit out there in an unaudited status for a while until about December, and then we make that available to the members as well. But we need to know what future benefits someone might get as well. So we do not know. There's almost 1,000 school districts in Illinois. We have no idea what types of things might come up for anticipated salaries for your TRS members, for your staff. So what kind of raises will they get? How many sick days do they get going forward? So we can do estimates, but the members need to sort of have an idea of what those things are. If they have service with a reciprocal system, we need to reach out to that. There are 13 pension systems in Illinois. TRS is just one of them. And if they have service in one of the other systems, we need to reach out to that system to bring the data in so that we can include it. So we run benefit estimates, putting all that information together for your staff. We also provide information on how they are going to obtain optional service. There are a number of things, I'll show you what they are, that they may be able to purchase. So we will give them direction on how to go about that, how to use that reciprocal service, and what they would get in terms of service credit for any unused sick days. So we give them direction on that. We will explain the cost and the enrollment process for TRIP, which is the insurance, health insurance that they can have in retirement. And we will walk them through the disability and death benefits. So those are the things that we do for TRS members every day of the week. Here's what we don't do. Very important to note these things as well. We do not provide financial advice. So right now, at least through this year, through June of 2026, there's that accelerated annual increase lump sum that Tier 1 members may take, changing out their 3% compounded increases for lower increases that start later plus a lump sum. Sometimes people will come in and ask us what we think they should do. We do not provide that financial advice. We will direct them, we will put the numbers in front of them and direct them to a financial advisor to make the right decision. We do not tell them whether or not we think they should enroll in the TRS Supplemental Savings Plan. Again, we make all of that information available, and we will tell them, you know, there are some very positive things in this program that they would benefit from. But whether or not to enroll in it or choosing the best option for them, the TRS benefits counselors are not qualified to do that. So we do not do that. However, we do have someone on this call that could help with that. That would be Terry Bailey. We do not interpret the district contracts or incentives. Sometimes people come in with their contract and they want to know if we can help them understand what types of benefits they could get in retirement. Again, with 1,000 school districts out there, we are not qualified to try and explain how those things will work. So we are going to direct them back to you for that. We're going to direct them back to the district. And then which health insurance program, we can sort of explain how the different programs work, a PPO, an HMO, open access, but we cannot give them advice on which one we think they should take. So we really do watch for that line and are happy to help them with the things that we are experts in, but we will direct them to a better source if it's something that we do not do. As to where money comes from to fund all of this, there are contributions from both the TRS members and the district. So for TRS members, they are going to contribute 9% of gross earnings to TRS. Now, it's possible that you in the district may pay some or all of that. We really don't care which, you know, if it comes out of their check or if you are paying some of that. But somebody is paying 9%, 7.5% of that is going towards their benefits, their retirement and such. Half of it is going towards their annual increase in retirement. And then 1% of it is going towards death benefits. And we will touch on that a little bit later. Also, in addition to the 9%, the members contribute 0.9% to this fund, Teachers Health Insurance Security. And that is to subsidize the health insurance for the TRS member in retirement. So this is not optional. They contribute to this even if they end up not going on TRIP when they retire. This is actually not our money at TRS. This is a fund that the state runs. So it is a separate contribution, and the state is the one that manages that. There are also contributions from the employer to fund all of their benefits. 0.58% of payroll is going towards retirement benefits, and 0.67% is also contributed by the employer for that subsidization of health insurance when members retire. So we kind of lay this out for our members so that they understand how this all works. The TRS pension plan is the primary plan that is for their retirement, and it's called a defined benefit plan. So they're contributing 9% of their earnings, and that is going towards their pension, disability and death benefits, and survivor benefits. And in exchange for that contribution, they have no choice about making that contribution, but what they get for that is a lifetime monthly benefit. So between TRS and the state of Illinois, we are going to pay members as long as they live. So that's the primary plan that TRS administers. In addition to that, as an option, a supplemental plan could be in place so that it's not required, but always will benefit a member if they choose to contribute. And these are called defined contribution plans. So they could contribute to the supplemental savings plan, the TRS-SSP. It is a 457B plan. Maybe you have a 403B in your district and they contribute to that. They could have an IRA. So these are separate programs that members could contribute to, which would be in addition to their TRS pension. There are some federal plans in place, Social Security being one, that TRS members do not contribute to Social Security. So in the private sector, most everyone does contribute to Social Security, but TRS members do not. However, they do contribute to Medicare. Medicare is a subset of Social Security, if you will. So it's part of SSA, but it is to put Medicare in place for them when they reach the age, most of the time it's when they reach the age of 65. So TRS members do contribute to Medicare, do not contribute to Social Security. One of the things that makes a big difference in how someone's pension is going to work is whether they're in Tier 1 or Tier 2. So there's a very cut and dry delineation here. January 1st of 2011, if a member contributed to any of the 13 pension systems before January 1st of 2011, they are in Tier 1. If their first day was on or after that, they are in Tier 2. So this could be even if somebody contributed in 1995, worked a few years, took their money out, and then came back to the system after 2011. Once you have contributed before January 1st of 2011 to any system in Illinois, you are in Tier 1. After that date is Tier 2. There's nothing you can do to change that tier. And this is one of the big differences between the two. So Tier 1, the regular retirement age is going to be the age of 60. And if they have at least 10 years of service credit, we are going to calculate their pension and it will not be reduced. You see this age 62 with at least 5 years. Most commonly, if someone falls into that category, it would be someone that did a lot of subbing or part-time work over the years, and they accumulated at least 5 years but didn't get to 10. That's fine. They have to wait until 62, but they can get a pension. The regular retirement age is 60 with at least 10 years. In Tier 1, they can retire earlier than that. They can retire as young as the age of 55, but that comes with a couple other conditions. If they're under the age of 60 and they want to start collecting a pension, they need to have at least 20 years. So the 10 years would not be enough. They need to have at least 20 years. And it would be a reduced pension because it's early retirement unless they have 35 years. So Tier 1, between 55 and 60, they can retire and not be reduced if they have 35 years of service credit. But if they have anything less than that, it will be reduced. So that's Tier 1. Generally, age 60 or older, between 55 and 60 with those extra conditions. Tier 2, the regular retirement age is 67 with at least 10 years. Tier 2 can retire as early as 62, still with that 10 years. Tier 2 is strictly age-based, however. You cannot work a lot of years and avoid that reduction. If you start collecting sometime between 62 and you're not yet 67, it would be reduced. So these are the same ages and reductions that Social Security has, actually. This is very common in the private sector. So Tier 2, 67 would be unreduced. Anything younger that down to the age of 62, they could collect if they have at least 10 years, but it would be reduced. In either case, if their pension is going to be reduced, it's loosely, we'll say 6% for each year they're under their full retirement age, but that is prorated literally to the day. So if it's a year and a half, it would be 9%, 6% for the full year and 3%. Okay, so how do we figure out the pension? Just so that you have a general idea. Again, this is something that we do every day of the week, doing these estimates, but these are the factors that are going to enter into it, just to give you an idea. We're going to take service credit times a formula factor. That'll give you a percentage. We take that percentage times their final average salary, and that is their starting pension. Service credit is divided into a few different ways that you can get it. There's actually 4 ways you can get service credit, and most of it is going to come from working. Just about everybody has a contract, if they're full-time, has a contract that's 180 or more days. 170 days is needed for 1 full year of service credit. So once someone gets to 170 days, and that goes from July 1st of one year through June 30th of the next year, that's our fiscal year. Once they get to 170 days, they have maxed out at a full year of service credit. So even if they're an administrator, you could see here the 260 days, they work all 12 months, still only get 1 year of service credit. They do not need to get a full year of credit in order to count it, though. So if someone is a part-time teacher and not working every day of the week, or maybe a substitute teacher, or maybe they start mid-year, then we take whatever number of days they worked, divide it by 170, and they get a partial year. So TRS is pretty simple. Other pension systems have a different way of doing this, but for TRS, if you show up to work for a day, you get a day of service credit. It doesn't matter how much money you earn. Once you work a day, you get a day. So this example here, the 94 days, maybe somebody started working second semester and there's only 94 days. You take that, divide it by 170, and they get 0.553. But you see here, once you get to 170 or more days, they are maxed out at 1 year of service credit. Unused and uncompensated sick days are another way that members can get up to 2 years of free service credit. I always tell them not much is free, but the sick days are free because they don't have to pay anything for them. They get sick days each year in their contract, and if they're lucky enough not to need to use them, they can save them and pile them up until they get as much as 340 days. That would be 2 years. 2 times 170, that is the maximum. But they don't need to have a round number of days to count. So every sick day is going to count for service credit until you get to that 2 years. So this, when someone leaves the district or retires, we are looking for you to report those unused sick days to us. And we always tell members that if they worked in another district other than where they work currently, we tell them to go out on their TRS account and be sure that if they have unused sick days, those got reported. So we do look for you to report those if someone resigns. And of course, we're going to ask you for it if they retire. But sometimes if it was a long time ago, it can be hard to recreate that data. Maybe you got a new system or something. So we tell members, when you resign from a district and go to another one, you're going to want to go out there and be sure those sick days are there. And if they're not, we'll ask them to send you a former employer sick leave certification form, and then those days can be reported. And they will just magically show up on their account once you report them. Again, they don't have to pay for them. Now, there is some service credit that they do have to pay for if it applies, and that's called optional service. And this is for things like teaching in public school system in another state, maybe a leave of absence that they took from a district. Maybe they got rift. So not too common these days, but if someone lost their job because they were no longer needed, their position was eliminated, they could buy back some time there if they were unable to find a job after that. Serving in the military, they can get up to 2 years of service credit for that. Subservice prior to 1990, before 1990, subs did not pay into TRS. Also, part-time educators, homeschooling, that type of thing. They didn't used to pay into TRS, so they could track down that service credit and buy it. Private school does not pay into TRS. That's a completely different system. So they can buy up to 2 years of private school. We do warn them that usually is fairly expensive, but it can be helpful. Sometimes people worked in TRS for some period of time and they left and thought they were not going to come back, so they took the money out. And now they're back and they would love to have that service back. They can buy it back. So that is an option. And then I've not run into anyone that fits this category, but beginning if someone was paid for student teaching after July 1st of 2019, they can buy that service credit. Now, when they're student teaching, of course, they're not automatically paying into TRS, but they could buy paid student teaching. The reason we call this optional service is because we send various forms to the TRS members and we direct them, how do you track down and verify this service? And once it gets back to TRS, sometimes these forms are going to come to you depending on what it is. They're going to ask you to verify it. It comes back, we calculated a cost for it, and at that point, it is the member's choice whether or not they want to buy it. They can buy some of it, all of it, none of it. That's why it's optional. The refunded service, they do either have to buy all of it or none of it, but we go through that with them. So that's the optional service. And then there's the reciprocal service. So this means that they worked in one of the other 12 pension systems besides TRS. The most common ones that we see would be Chicago, state universities, maybe state employees, SRS, that Illinois State Board of Education, something like that, or IMRF. But there are other systems, the judicial system, the Water Reclamation District in Chicago. There are some other systems that they might have worked in. And what happens is they need to have 1 year of service credit that is not concurrent with TRS in order to count it. And then we add all the service credit together and they would get 2 separate pension checks. So in these situations where someone has service in another system, they would contact us. We reach out to the database and pull that service credit in. And then we can run an estimate for them that shows what their pension would look like, counting everything together. You cannot do that for them, and they cannot do that on their TRS account either. The reciprocal service must be done by TRS. They would need to call us and have us run that estimate for them. So the 4 ways that they can get service credit, most of it coming from working, some unused sick days, possibly optional service, possibly reciprocal service, depending on what other things they've done. The formula factor is one thing, 2.2%. What a formula factor means is that whatever their final average salary is, they're going to get 2.2% of it for every year they work. This was the only formula factor since 1998. Just about everybody working these days has earned all of that out. So that's another thing that members would contact us for. If they have a lot of time before 1998 and they're not sure if they need to do something, we tell them to call TRS. We can look at their account and tell them. So for purposes of our conversation, 2.2% is the only one that you're looking at these days. Final average salary is going to be the average of their 4 highest consecutive years out of the last 10 years worked if they're in Tier 1, or the 8 highest consecutive if they're in Tier 2. That's why so many times that district incentive, that's what we call it. If you are in a district where you say, if you give us a certain amount of notice, we will give you raises that are above and beyond, for those last 3 or 4 years or 2 years, something like that. That is going to help them greatly in retirement if that kind of a situation is out there. So we're going to take those last, well, it doesn't have to be the last 4. It usually is the last 4 of the last 8 where they make the most money. Tier 2 does have a salary cap. This goes up every year. It's currently $127,283. Like I said, it does go up every year. So that is the maximum for a Tier 2 member that would be counted if that's one of the 8 highest that we're using. Once someone hits that salary cap in any given year, they stop contributing to TRS because it's no longer enhancing their pension. So if somebody's making $150,000 and they're in Tier 2, once they have reported $127,283, they do not contribute the 9% beyond that. Salary is going to include not only their contract pay, but extra duty stipends, all that kind of, if they're coaching, yearbook, lunch duty, they sub for somebody during their planning period, all of that stuff is going to count. Also, the entire 9% that's contributed to TRS is going to count. Even if you as a district are paying some of that, it is going to count for their earnings. A TRS member can count an increase up to 20% with the same employer. And if they get a raise of more than that, it's going to cap out at 20. Pretty unusual. Those are not the usual raises, but sometimes where we see that would be that you've gotten in a situation, most often I think it's high school, where somebody has to pick up an extra class period because a teacher cannot be found for a particular class. And so they might get a stipend, 15, 20%, something like that for picking up that extra class. They are going to be able to count that up to 20%. Now, as the district, anything over 6% is going to incur a fee on your part, but the member can count up to that 20%. So looking again, that is the TRS pension plan. You put those numbers together, that'll come up with an amount that they get. So we're going to take their service credit times 2.2% times their final average salary, and that gets you to that defined benefit starting pension. Then going beyond that, this is where I will bring Terry Bailey in here.
Thank you, Sandy. Back in 2018, the Illinois General Assembly passed a law to amend the pension code to add a supplemental retirement savings option. This was designed to create one high-quality, low-cost, uniform plan available to all members throughout the state of Illinois. TRS has chosen Voya to be the administrator for this plan. There we go. All members, full or part-time, contractual members who are eligible to participate in the supplemental savings plan. It is a defined contribution plan that offers them both pre- and post-tax savings options, and they can enroll at any time throughout their career. There is no open enrollment period. The SSP is a defined contribution plan. It is an employer-sponsored tax-favored retirement savings account. You get to determine how much you contribute, with the minimum being $30 per pay or 1%, up to the maximum annual limit of $23,500 set by the IRS for 2025. Now, it does come in a couple different options. Pre-tax option allows them to contribute to the plan prior to the taxes being taken out of their account. Because this is tax deferred, all growth and money contributed grows tax deferred, and they will pay taxes on their withdrawals in the future, typically at retirement. They also have the option to contribute on a Roth basis. Now, with the Roth contributions, the taxes are taken out of their pay before the contributions are applied to the account. Now, because the taxes are withheld, it's no longer tax deductible. However, they may qualify for tax-free income in retirement. As long as the money is held in the account for a period of 5 years, they've attained the age of 59 and a half, and they're separated from service. Now, both have the annual limit of $23,500, and both have the $7,500 additional catch-up contribution. One of the benefits of the Roth is you're not income restricted. So our administrators and higher earners can still contribute for tax-free income in retirement through an employer-sponsored plan that they can't do in a Roth IRA or on their own. One of the most frequently asked questions we've received since launching the plan is, how does it differ from a 403B? And there's two main differences. The first one being the deferred compensation, or 457B, is classified by the IRS as a defined contribution plan, where a 403B is classified by the IRS as a tax-sheltered annuity. Annuities tend to have that extra layer of fees that make them an annuity. A defined contribution plan is essentially a box of mutual funds. A 403B is a box of mutual funds with the annuity wrapper holding it all in place. Now, the biggest benefit for our new members is the ability to access your pre-tax savings at separation of service. So if they've reached their 34 years of service in their mid-50s, and they can save into this account and use it to bridge the gap between when they want to retire and TRS's full retirement age, without that 10% penalty that's associated with most other retirement accounts. IRAs, 403Bs, 401Ks. If you are not 59 and a half, they're going to assess you a 10% penalty in addition to your taxes on any pre-tax savings. With the SSP, you have full access without any penalty. You simply pay the taxes and no penalty to access your money. Both offer a end of career catch-up contribution. Both offer the age 50 plus $7,500 additional contribution. Now, 403B does offer withdrawals and loans throughout the length of your career. It's a little harder to access your money in the SSP, but we do have unforeseen emergency for medical emergencies, foreclosures, things like that. They can contribute to both independent of the other. They're apples and oranges in the IRS's eyes. They could max out both at $23,500. They do not affect each other in any way. Now, a lot of your new members will be automatically enrolled into the SSP. Anyone who starts on or after 1/1 of 2023 in a full or part-time capacity will be automatically enrolled in the supplemental savings plan. This takes effect approximately 30 days after their begin date. Their first payroll cycle will get them into the TRS system. And then the next payroll cycle, they'll feed up to Voya. Once we get them in our system, they will receive an enrollment guide. This guide will come in the mail to them, addressed to them, with a date by which they must make their automatic enrollment decision. At that time, they have 3 different choices. They can go in and personalize their account, register at the TRSILSSP.voya.com website, add their own contribution decision, their own investment decision, add their beneficiary, and that will feed up to you through Gemini to the next available payroll cycle. They can go in and confirm their automatic enrollment. With automatic enrollment, it's set up at 3% on a pre-tax basis into the age-appropriate target date fund. If they confirm their automatic enrollment, that effect is going to take place approximately 30 to 60 days after their employment begin date based on your payroll and reporting schedule. And this is if this isn't the right time for them to save. Once they get that guide in the mail, they can go in and change their contribution amount to 0, effectively opting out of the automatic enrollment process. Now, just because they decide this isn't the right time to save for them doesn't mean that they can't go back and sign up later by changing that contribution amount to something that works for them in their future career and start saving into it. It is open enrollment throughout their career. So if they do not make a decision by the date on their enrollment guide, they will be automatically enrolled at the 3% into the target date fund closest to their expected retirement date at the age 65 based on their year of birth at 3% of their reported salary and earnings on a pre-tax basis. So, and if they have any questions, we do have some automatic or some auto enrollment new hire webinars coming up for them to join in on. Thank you, Sandy.
All right, thank you, Terry. Okay, now we're switching gears to something completely different, disability. And the main reason that I put this here is so that you know it's available in case you don't. Part of the 9% that members are paying towards TRS would go to temporary disability if needed. So this is not a separate insurance policy. They may have something separate for short or long-term disability with the district. That is fine. This is available to them should they need it. So what it means is that they have two physicians that will say that they are unable to do their job for physical or mental health reasons. They need to have seen those doctors within 90 days of the last day that they were actually in the classroom or at work per se. And you see there, it says only one physician is required if it's for pregnancy. They need to use up all of their sick days from the current district. So from your district, they need to use up all of their sick days in order to go on temporary disability. But once they apply for temporary disability and are approved for it for the reason that they're not able to work, the benefit that they get is 40% of their contract rate on a monthly basis. And they do continue to earn service credit while they're on temporary disability. So if someone had enough sick days to get through half a year, we'll say, so they would have gotten full pay for that, but ended up going on temporary disability the second half of the year, they would have only gotten 40% of their pay for the second half, but they would end that year with a full year of service credit. So that is helpful to people that are forced to have to take time off work. It's only 40% of their pay, but they are still working their way towards retirement. So what would happen is we tell people that if they're within about 30 days of running out of their sick days and they think they're not going to be able to return to work, that is the time they should get in touch with us and let us know that they think they may need to go on temporary disability, and we'll start working through the process with them. And then death benefits, just so that you know this is out there as well. Again, this would be separate from anything life insurance or whatever they have for the district. The 9% that they pay to TRS is going into two separate buckets. 1% goes to pay for survivor benefits, and the other 8% is going to fund their own personal pension. The survivor benefit is payable in a couple different ways. It could be a monthly benefit or a lump sum. A monthly benefit is only available if someone is a dependent to the TRS member. A dependent would be a spouse of 1 or more years. And this doesn't even matter if they have their own money, maybe they're a TRS member and they have their own pension. It's strictly based on the fact that they're married for at least a year. So a spouse is a dependent. Biological or adopted child up until the age of 18 or until 22 if they're an unmarried full-time college student. Possibly an adult child with a disability, possibly the TRS member's parents if the parents were listed as dependents on their taxes. So dependents can get a monthly benefit. If someone does not have any dependents, then a lump sum is payable, a one-time lump sum. So that is the survivor benefit. The other 8% of the money that members are contributing to us will go to a fund to pay their own pension. So that lump sum, it doesn't matter if someone's a dependent or not. What happens is 8% of their earnings are invested, and it will continue to grow until they get their last check from you. And then once they retire, we begin taking money out of that bucket. Every month we take out however much money we paid them in terms of their pension. It only lasts, that whole bucket of money from their whole career, lasts about 4 years into retirement. And at that point, we have paid them back. We say they recovered that money. We paid them back everything. So we will still pay them for as long as they live, and they will get paid from the TRS trust fund. But if a TRS member passes away while working all the way through until they have recovered their own contributions, whatever is left in that bucket will be paid in a lump sum to whoever they list. So 2 separate benefits, possibly both are payable, but the beneficiary refund would be only if they retired as an active member or very early in retirement. Most people will outlive this, hopefully. Okay, so how do people retire? How does this work? Well, there are responsibilities on both the part of the TRS member and you. And you may be seeing some of this right now for people that retired at the end of the 24-25 year. So we tell the TRS members that they need to contact TRS 6 to 12 weeks before their last day of work. They can do it online. Quite honestly, we kind of like them to call, because if we have any questions, we could just ask them while we're talking to them. And this is really important because sometimes people think that they gave you 4 years notice or 2 years notice that they were going to retire. So they think that this step is completed, but it's not. Notice to you is not the same as notice to TRS. They need to call TRS and tell us, I am retiring such and such a time. So 6 to 12 weeks before they are done is when they will call us. We will send them what's called a retirement packet. It's got their retirement application, their direct deposit, and a trip participation election form. So that's the form if they're going to sign up for health insurance, they need to complete. If you as a district are agreeing to pay for some of their health insurance in retirement, they're going to bring that form to you to fill out the bottom. You will tell us what you're going to pay for. We don't see that as often these days, so most of the time it's just them signing up and it's going to come out of their pension. We tell them if they are retiring reciprocally, if they had service with Chicago or IMRF or state universities, they need to initiate the retirement themselves with that other system. The other system will send them paperwork as well. Once the TRS member returns the paperwork to everybody, both TRS and the other system, at that point, we work with the reciprocal system to get this all done, but they do need to initiate retirement with the other system. And then if they have any things that they need to pay for, maybe we researched some optional service for them, something like that. We need them to either pay for whatever they're going to buy or waive it, so we can get it off the books. So everything has to be settled in order for them, for us to begin processing their pension. So that's what the TRS member needs to do. Then there's a couple things that you would do as the employer. There's 2 forms that we need from you. One is what we call the supplementary report. So that's something that we generate to you electronically, and it will sit in your queue, waiting for them to finish. They have to actually wrap up the year before you can send this back to us. They have to have gotten to the last day they were paid for. And then you will tell us when was their last day, how much money did they make in that last year, how many unused sick days did they have, and then we're also going to ask for what we call a sick leave granting certification. So that is where you will tell us if, in fact, you granted them any extra sick days above and beyond what's in their contract in the 4 years prior to when they finished working. So we need both the supplementary report giving us their their last day, their earnings, and their unused sick days, and the sick leave granting certification. We need both of those. Okay, post-retirement employment, it's so important for everyone to understand this. We love, because we think it's really good for the students, to have retired teachers come back and sub, or sometimes an administrator was not easily replaced, so they need somebody to come, after retirement to be a principal or a superintendent or something on an interim basis. These post-retirement limits are very, very important to understand. In order for a member to be retired, they need to receive their first pension check. All the way until we put that money in the bank for them the first time, they could call us up and say they changed their mind. They're not going to retire. We take it out and pretend like it never happened. Once they are paid, then they're done. They are officially retired. There is a limit to the number of days or hours they could work. Right now, it's going to be 120 days or 600 hours. That goes through next June. We don't know the state. It'll be at least 100 days or 500 hours. That's in the pension code. This increases because there's such a shortage of subs. So we'll see if they renew it again, but at the moment it's 120 days or 600 hours. So they need to get their pension check. They need to watch that number of days that they work. They cannot do any work in TRS until July 1st of the year following when they last worked. So if they finish up working in May or June, July 1st is coming right up. But if they ended up working sometime into the next year after July 1st, maybe they did summer school until the 15th of July or something like that, they have to wait all the way till the next July 1st. So they cannot return until July 1st after they last contributed to TRS. And they cannot return to the same employer for at least 30 days. This next note here may not prearrange post-retirement employment. They cannot have anything in writing saying that they will return to work before they are retired. If they have something in writing saying they're coming back, then they're not retiring. So this is, sometimes members will come to us and say, my district wants to know if I would be willing to sub next year after I'm retired. And if you're talking about it and they say, yeah, after I get my first check, it's got to be after July, all those things are in place, I'll probably come back and sub. I'll talk to you about it when I'm retired. They cannot sign paperwork with you agreeing to do work in the next school year until they are officially retired. So you can talk about it and say, yes, they want to consider doing that, cannot have anything in writing. If someone is retiring reciprocally, they need to contact that system and find out what those limits are. And if they are in Tier 2, retiring from TRS, they cannot work full-time. They can work part-time, but not full-time in a reciprocal system in Illinois. So if they're collecting a pension from TRS and they're Tier 2, they could not work full-time in IMRF or something. But other than that, each system has their own rules. So they need to be sure they're following reciprocal rules as well. Those are usually different than our rules. Now, outside of TRS, there isn't any limit on what they do in private sector or out of state. If they want to teach full-time in Indiana or full-time in Wisconsin, that's fine. That's not TRS. They can do whatever they want there. And there is no limit on earnings. So if they are returning to do sub work, there is a limit on the days or the hours that they can work, but there's no limit on how much money you could pay them. We don't care what the pay is. It's just the days or the hours. So a couple things also that go along with this. We began a process this year with the 24-25 year. We put a process in place that the first time a TRS member is reported in Gemini for a day of work in TRS, we send them an email and say, you didn't do anything wrong. We just want to remind you that these limits, 120 days or 600 hours, these limits are out there. So don't forget, you were reported for a day, and you have a bunch more to go, right? Okay, once they get to 450 hours, so along maybe March, April, maybe they did a whole bunch of work, and now they're up to 450 hours. Again, it does not mean they did anything wrong. We're just reminding them that they're at 450 hours, don't go over 600. It is the member's responsibility. We do combine if they do sub work or something for more than one employer. We do combine the data we have, but it is their responsibility. We tell them you need to be sure that you're sort of paying attention to this. If a member violates post-retirement in the first year of retirement, if it gets reported that they did 700 hours of sub work or something, we stop their pension, and in the first year, they have to pay back what we paid them the first year. It's a very, very big penalty for violating post-retirement in that first year. After that, they don't have to pay us back their pension, but we do stop their pension, and then they're going to have to start it again when they actually retire. So it's very important for them to understand, and it's also helpful for you to understand what things they would face if they do too much, and also what things they can't do, particularly signing anything to agree to return to work before they have officially retired. Then the other thing to note is that post-retirement work and work in the subject shortage area are not the same thing. There is a separate program that at this time, it goes to June of 2027. It's called subject shortage, and it means that a teacher that is retired can legitimately return as a full-time employee without sacrificing the pension that they're receiving. The thing is, this is, in order to qualify for this, there is a very detailed process that needs to be followed. So the ROE needs to approve this, saying that the district has done their due diligence trying to hire someone in a particular job and they were unable to find a qualified teacher or whatever. So they have to sign off on it. They have to submit it to TRS. TRS has to approve it, and then TRS has to notify the teacher that they have been approved for subject shortage. So it's really important that it goes all the way through that process before they return to work, And then the other thing is, if they are legitimately working in a subject shortage area, they do need to be on that district's health insurance. So we would have to suspend trip insurance if they were on that while they're working in that area. Okay, just a note about health insurance. We always want teachers to sort of know what this looks like before they decide to retire, especially if they have to cover dependents. So we have different programs that are available. A lot of our teachers are retiring in this, well, not at 26, of course, but, 64, like before Medicare, right? They're going to be Medicare eligible at 65. Everything on this chart here is per person per month. So if they're picking a managed care plan just for them, $370 a month. If they went with a PPO, $857 a month. If they have a spouse that they need to cover that is not Medicare eligible, $1,483, $1,726 per child, $484, $624. Everything gets added up and comes out of their pension. So if a member is retiring and they need to cover especially multiple people, we want to be sure that they're considering the fact that this will come out of their pension check. Once they become eligible for Medicare, it's much less expensive. $7 for the Medicare Advantage, or $27 for a dependent. Now they still have to pay Medicare Part B. That's a different topic, but it becomes much more manageable at 65. But it is good for them to understand these are what costs they're going to be looking at before they make a decision to retire, and then find out $2,500 is coming out of my pension for health insurance. So not a, okay, so help is on the way. We have a number of ways. So Nick, our host here, Carly, and I are working as the outreach team. And then we also get great support from the benefits counselors. Maybe your TRS members have met with some of them as well. And we have a variety of webinars that we offer. The time to retire, we hold those in February and first couple weeks of March every year. And those are specifically for people that are planning to retire in that given year. So we'll say 2026. Now, what we do is we send an email to all the TRS members that technically qualify to retire. So they're old enough and they have enough service credit, but we of course don't know yet if they're going to retire. So we send them an email and say, if you're retiring this year, you could join this webinar. And what we're looking to do is remind them of the things that they should be doing at that time in order to make their retirement easy. So they get very busy. A lot of times they met with us a couple times, but they might forget something. So we want to remind them, these are the things that you should be doing now. We just wrapped up our What's Next webinars. So once people put in for retirement, we know that they're planning to retire in 2025. So then we hold webinars for them in June and the first half of July. And what we're telling them there is, okay, you probably finished all the stuff you had to do. You left the school by now, cleaned out your room, had your parties, all that kind of stuff. Now, these are the things that should have happened already. Do you need to sign up for health insurance? If you need to do that, let us remind you how you would do that. We tell them what kind of tax forms they're going to get at the end of the year. So we're trying to reach out to them when they actually have a minute to think about it and not everything else. We began a series of webinars for your subs. Your substitute teachers are the same as any other teachers. They just don't have a contract. To us, they are TRS members, just like your full-time teachers. They just usually earn less service credit in a year. Maybe they're not receiving health insurance benefits or sick days and things like that from the district. That's fairly usual. But the subs are earning a pension. They could qualify for disability. They have death benefits available to them. So to TRS, they're the same as everybody else. They just usually earn less service credit in a year. And the way that looks to them is kind of different, usually. So we have a separate series of webinars for the subs so they can see what their benefits look like with us. And then any number of other things. This would be a great thing when you fill out that survey. If you think of something else that's not on this list. The TRS Express, we offer these separately to Tier 1 and Tier 2 members. We offer it throughout the year and then a couple times a year. Usually the Monday of Thanksgiving week, a lot of teachers are off, so we offer that throughout the day. And then our infamous Casimir Pulaski Day. A lot of districts are off for that day, but TRS is not. So we hold webinars then, and we do still have them after school for those that aren't off. So this is just a shortened version of, things to sort of lay groundwork for people. Not so much pertinent to you, the accelerated pension benefit. Those are teachers that we call inactive. They have service with TRS, but they're not currently working with us. So there's some other things that pertain to them, but of course they're inactive, so probably not people that are working for you. Financial wellness things are, Voya offers things like that. The substitute teachers and new to TRS, brand new teachers to TRS, they don't have They're usually kind of overwhelmed with things. So we are trying to reach them in little bits and pieces to help them out. So these different things, we also have a series of retiree webinars, but those would not be your current employees. But we offer various retiree webinars as well. So if you need to reach us, and then if people have questions, I see there's a couple in there already, but if you have some questions, you could start typing those in. The various groups that you would need to reach out to. Employer services is probably the group that you most often interact with, you guys, and that would be for your defined benefit reporting, sending in those supplementary reports. If somebody is looking to do work in TRS after they're retired and you are not sure whether or not that's going to violate post-retirement, you could talk to employer services and maybe they'll get a job description, something like that. So they are the main contact for people that are in HR related positions in a district. Our TRS members are reaching out to us either on the 877, the toll-free number, or member services, email. They can contact us by email. And then if you're looking to reach out to VOIA, which would be Terry Bailey or Stacy Russell, the Supplemental Savings Plan, there are some things they could reach out to TRS for that. But if your members are looking to reach out to them, they will contact them and they can schedule an appointment or just reserve time to ask questions using that time tap link there. You have the TRS website, you have the YouTube channel is a great place to go. We have recorded most of our webinars so that you can go there and, you could go and see things, but our members, we often direct them there and say if they were not able to attend some kind of meeting that we had, they can go watch the recording of it on the YouTube channel. So there's all kinds of ways that they can reach out to us. So with that, Nick, I will leave this up here for a moment. Nick, do we have any questions here?
We do, Sandy, and I'll just take a second here to say great job. This is a lot of wonderful information and a wonderful array of info that is pertinent to HR pros. So I have several questions bookmarked here to pose to the group. Also regarding service credit, and this is particularly for subs or those who are working maybe a behind the wheel driver's ed job. Is 1 hour of work considered a day of TRS service credit?
If you are working in a TRS covered position, if you show up for work, you get a day of service credit. Now,
Excellent.
if you're looking to do, if you are looking to do hours, you would just count the 1 hour. But yes, when you work a day, you get a day of credit.
Excellent. Okay, this one is again regarding service credit, but it's a sick leave service credit question. So in this particular district, they do offer a small stipend for any unused sick leave days that are not needed for the calculation of pensionable service credit. Would all of their accrued days be reportable to TRS then as service credit at retirement, or just the days for which they are not paid?
We will ask that you report all unused sick days from your district. They may have some from another district as well. All unused sick days to us. If you are going to compensate them, generally we'll see that after July 1st. It does have to be after they get their last paycheck so that you don't mess up their earnings for their final year. If you compensate them for something for the ones that they didn't need, that's fine. That's separate from us. But you will report all unused sick days to TRS from your district.
Excellent. Thank you. Is there somewhere that would explain how it is that substitute teacher pensions work?
They work the same as any regular teacher. The thing that's interesting about subs, and when we set up our subs or teachers too. Certainly you are welcome to join that as well. The things, there are a couple things that are unusual about subs compared to regular teachers. When you look at a final average salary, for example, for a full-time teacher, most of the time it's going to show 4 years, 1 year of service credit, another year of service credit, another year of service credit. With your subs, it takes usually more school years to get to 4 years. So it is very possible with a substitute, when you look at their final average salary, it's partial years for like 8 years or something like that. And then that totals their 4 years. So that looks different to them, which is why we sort of talk to them separately so that they can look at what is more likely their situation. The other thing is that qualifying for disability, they have to have worked, I think it's 340 hours in a certain period of time. So qualifying for disability is a little bit different, because if they're not full-time, we have to be sure they worked enough in the recent past so that they can qualify. So it's not that anything is different than a regular full-time teacher. It's just that their numbers are probably going to look different and maybe a little more confusing, because it's a little bit messier. It's not round numbers. So when we do those, certainly you would be welcome to listen in and see what happens there.
Excellent. Thank you. There's a question for just kind of an opinion question, I think, but do you think it would be a good practice for an HR professional to email their retiring teachers in June that Tier 1, Tier 2 retirement checklist?
That would be a great idea, actually.
In fact, we would appreciate.
Yeah. Yep.
Any help that you could or that you could give them to guide them through that process. Here's a new one. Are all of the Help is on the Way webinars that you mentioned in that slide, are those all posted on the TRS website for reference or for registration?
We are working on exactly that right now. One of the things that we needed to make a change was how we set these webinars up. So this is the first that we've done on a different method of setting things up, if you will. And, we wanted to do this one, do a couple more, and then we are looking at posting what will be out there on a special section on the TRS website. So we definitely would love to have that available for you if you want to listen in on any of them, but for members to be able to go out there and see what's coming up. And probably, I think what we're thinking is that it will be a rolling 3 months, if you will. If someone we know we're going to do something in April, but if they register now, that's too far in advance and they're not going to remember. So we'll do it probably on a rolling 3 months.
Excellent. Thank you. Last question in the active box here is regarding sabbatical leaves and service credit. If an individual is on a board-approved paid sabbatical leave, would they receive a full year of service credit?
You said paid leave.
Yep.
So if they're paid, well, if the contributions are coming to TRS, I'm not sure about the paid part. Then if they are on a paid leave, you're probably reporting their earnings to us, and there's no leave of absence because they already got paid. If they are on board certified leave and not being paid, then that would be the service, you would report leave of absence, and then they would have to buy that. But if they're already being paid, or people that are on, they'll refer to it as leave of absence, but they actually use sick days. They didn't run out of sick days. They don't need to buy anything. They're getting full pay, and money is coming to TRS on those earnings. So what they're looking to possibly buy is time that qualifies. They can't just buy your service. Sometimes you have people, like 34 and a half years, and they want to know if they could buy a half a year out of the blue. Nope, can't do that. But If it's one of those things that qualify, it would be a situation where they were not paid and we're looking for that TRS contribution because we need that to pay the pension on it. Thank you very much for joining. Please do let us know if you have any other topics that would be helpful or something like that in that survey. We really do look at that information in order to get direction going forward. So thank you for joining today. You guys are probably just about off and running for another year. So have a great one. And you will be hearing from us as we offer more things to your members, to your staff, and look to educate them on what we can do. And then there will be things coming from Terry and Stacy at Boya as well. So I look forward to working with you.
Well, again, thank you very much, Sandy, for your expertise in presenting today. Also to Terry Bailey, who is our resident expert on the SSP. Thank you to Carly for your assistance in the Q&A. And thank you to all of you who attended today. We hope this has been an enriching hour for you. Again, as Sandy said, please reach out if ever you have questions about any aspect of TRS. Have a great day.
Thank you.